What is your pick for us and why?
Sure. Amazon. It's been a top pick of ours for a while, but we still think that there's momentum here to go in the fourth quarter. It's had a great run in 2023, but we think it's one of the laggards, continues to be a laggard among the mega cap companies in terms of where estimates can go, where the valuation can go. And we just think that the momentum will continue to be its friend because the estimates for a large part of large tech, mega cap tech, have peaked in many respects. But Amazon, we think that with the leverage in the model, we think that those upside revisions should propel the stock higher.
All right, so obviously Amazon is a very diversified business.
Sure.
I want to talk to you about one, I know you're laughing, they do a lot of stuff over there. I want to say about one part that's facing some regulatory scrutiny. Of course, it's the e-commerce business, the FTC accusing it of monopolistic practices. We just had Dan Ives on Wedbush saying there was headline risk there. How do you view that risk?
I think it is headline risk. Absolutely. I mean, anytime the FTC puts, upwards of 20 charges against you, it's not a good thing. But if you do look at what the charges are, we think that they are mischaracterizing a lot of the issues that they're stating. They're overstating Amazon's market share, but not including the retail efforts of Walmart and Target when talking about the broader retail industry. They're not including Shopify when they're talking about what the e-commerce industry landscape looks like. So we think that those mischaracterizations will cause them to lose another case. I mean, under Ms. Khan at the FTC,
we don't want to get too much into the FTC. We just want to
record.
focus on Amazon for a second, James. I don't mean to cut
Sure.
you off there. I do want to ask you about one other issue. You mentioned market share. Amazon is the leader when it comes to cloud computing, but they are losing market share not only to Microsoft but also to Google Cloud. How big of a risk is that for investors?
I think that's going to reverse. The thing is, they've been the biggest player in AWS, and they will continue to be so. But those share shifts that we saw over the last couple of quarters in terms of the growth rates being faster for the Microsoft and Google, we think will reverse. You already saw AWS growth bottom out in the second quarter. They're guiding to improvements sequentially in the third quarter. And I think that trend will continue. And will we get back to the 30% plus growth that we saw, just a year ago? We don't think it's going to be, tomorrow. It'll take some time. The only kind of issue I would say risk as it relates to Amazon is obviously the recession risk, because you do have a question mark as it relates to the demand side of the equation when looking at the broader part of the economy. But the expectations are so low, the growth rates have slumped so much that even though the slope of that recovery might be a little bit flatter, the recovery is happening nevertheless.
All right, one last question for you. Valuation. Amazon trades at 59 times forward earnings. Isn't that really a risk right here? Is that the valuation might become too rich and lead to a sell-off as we continue to see this higher cost of capital?
Yeah, at the same time, it trades at only 2 times sales. So, but I do understand that in a kind of uncertain times, you do want to look at earnings. But you have to think about the earnings potential of the business. On the last call, CEO Andy Jassy stated that Amazon has the potential to have even higher margins than their peak rates on the retail side of their business, given the optimization efforts, the logistics efforts, and so forth. And if you take a look at that, every 1% improvement in the retail margin can yield upwards of 10% improvement in the earnings picture. So a little bit can move the numbers a lot and make that valuation that you just stated look a lot cheaper in short order.